this breakdown in correlation between what we've seen in the United States and Europe and other parts of the world, India, Hong Kong, and for example. Now, the India story is interesting, and we see that there in the yellow. But Europe has sort of like taken this sort of historic deviation from the US. But we know that the driver here is the Mag 7, and it's all about what the US is doing rather than what Europe is doing here. Is there some kind of Europe catch-up trade, or is that just not possible with this outperformance of AI?
Well, I think, yes, obviously the tech story has been fundamental to the outperformance of the United States. But we also had another important dynamic, which was the fiscal spending we've seen in the States over the last couple of years, which other major areas haven't been able to keep up with. So the growth dynamic more broadly in the economy has been more attractive than other parts of the world. Could that shift? So I think the tech story is a structural issue, but I think that sort of relative cycles could shift as the year progresses. For now, I think the US is quite well underpinned, although, interestingly, valuations are more attractive outside the United States. So we've actually been broadening out our exposure for the first time in quite a while. Yeah, so where does that take you then? Does it take you to Europe? Does it take you to emerging markets? Where do you focus for that catch-up? The first step was into Japan, like many other investors, and I think, again, the news we had from the Bank of Japan supports that, in the sense they're being very cautious in their exit from the very stimulative monetary policy. The weaker yen is very supportive of the Japanese market. Animal spirits are well and good in Japan, so we like Japan. We've been avoiding Europe and emerging markets up until now, but the valuations are quite cheap at this point in time. We do see the potential for rate cuts in Europe as we get through the next quarter. So I think there could be an opportunity for broadening out, particularly given how cheap the markets have got. And ultimately, the growth environment is still quite benign. We have a window here where growth is holding up. There's talk of rates coming down. Inflation for now is moving in the right direction. Things could get more complicated as the year progresses. Yeah, depends how far ahead you look. Yeah. Yes, exactly.
So the thing we've been hearing, both in the public and the private markets, we had the KKR's head of infrastructure on earlier in the show as well. And the theme we've been hearing over and over again is that Europe is behind in a lot of ways. Anna was talking about it in the markets, but in terms of actual investment, in terms of infrastructure, in terms of growth as well. And therefore, it's best to broaden it out at these cheap valuations. When does that pay off, though? How long before that trade works? Is that a 5-year time horizon? Is that a 12-month time horizon?
The European catch-up. I'm not in a place yet where I can structurally believe that Europe will be outperforming the United States.
Ever?
Well, I think things have to... I think, obviously, Europe has had a more difficult energy picture. You know, at the margin, that is improving. But I think that the growth dynamics are still more supportive in the US than in Europe. So for me, Europe is more of a tactical trade. I like it when I see growth more, you know, a manufacturing recovery, but not a structural trend for me yet.